Hey everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ. It is Tuesday, October 18th, 2022. We've got some economic financial news to get caught up on today. What's happening with your money, my money, and what we can expect down the road with this financial system that's basically running on easy money. Now, the easy money is starting to dry up a little bit with the higher rates. And people that are carrying debt are in big, big trouble because their minimum payments are going up on their credit cards. Unless you're paying off your credit card in full each month, you are going to be likely in some trouble with these rising rates. Also, home affordability, even though prices have come down in some markets, the carrying costs are still much higher because of the cost of living, the cost of heating the home, the maintenance, the upkeep, even the taxes, the insurance, everything is higher. And if you're not making a big down payment or paying cash, then your payments are actually going to be higher. We're going to talk about the staggering difference now in home affordability, even though prices are down. If you're not paying it off in full or making a big down payment, you're actually paying more now, even with lower prices. And here's a meme that breaks it down pretty well. 2021, the cost of this home, $600,000, 3% interest rate, a little over $2,000 for a monthly payment. 2022, even a lower price, but a 7% mortgage rate, $3,140. So see what I'm saying? If you don't have a big down payment, then your costs are going to be much higher, even with a lower home price. Now, this only shows a decline of $10,000. Some areas are seeing bigger declines. For example, here in San Diego, the median price fell just in the previous 3 months, almost 4 months now, from $1 million down to $910,000. Now, we're waiting to get the previous month numbers, and it may be more than $100,000 price decline now, but that's coming down from a super elevated amount of $1 million median price. And anyone buying a home right now out west, especially in California, expect to be underwater unless you have a huge down payment, or of course, unless you're a cash buyer. Now, let's shift gears a little bit here. A lot of people think that because they look around and they see people shopping, they see people buying things, that everything's fine, everything's normal. Things may look fine, things may look normal, but there is a tsunami on the way. And it's not just me saying that. Even the Fed admits it. They admit that there's going to be major job losses. And there's this news that's been going around now for a few days, and people are kind of analyzing this, and they're coming up with different conclusions. One thought is that the Fed is terrible. They know that people are going to lose jobs. They're raising rates anyway, even though it means job losses. And some people say, no, this is terrible. They shouldn't be doing this when they know there's going to be job losses. Other people, including myself, say, of course there's going to be job losses, because a lot of these jobs that were created were because of easy money policies and low interest rates and the Fed buying everything under the sun, right? So we have to go back to it again here, because this story is coming out that the Fed, a guy from the Fed here, Evans, he's the Chicago Fed president. He's saying fighting inflation is top priority, even if that means job losses. Yes, it's not that these people are heartless. I mean, maybe they are, but as far as this topic goes, this is what happens when jobs are created because of easy money and low interest rates. Those same jobs that were created from the boom get lost in the bust. So if we never wanted to see job losses, then we should never create jobs that are based on low interest rates to begin with. And in fact, if they would just keep interest rates high at an elevated level, then you wouldn't see these boom and bust cycles. You wouldn't see so many jobs created. But then the flip side, you wouldn't see so many jobs lost when the boom turns into a bust, when the low rates increase. But we all know they're backed against the wall. They're between a rock and a hard place. They're forced to raise rates because inflation is running so hot. But guess what? Higher interest rates alone is not going to fix the problem. Why are we still seeing month after month elevated inflation? Because it's not just about interest rates. It's also about lack of production. The fact that we don't manufacture enough here in the United States, that over the last few decades, we've shipped out so many jobs, including most of our manufacturing jobs, out to other countries with cheaper labor and lower cost of living. That's another danger with the high cost of living. Companies don't want to manufacture here. Just look at in the United States here, without even looking at other countries. Just within the United States, how many people left California, or how many companies rather left California? How many companies are leaving New York because of the taxes and the high operating expenses? And they're going to cheaper states like Florida, like Texas, right? So it happens here nationally. It also happens globally, where jobs get shipped out of the country to places where manufacturing is cheaper. It's pretty simple. It's not rocket science. So yes, jobs will be lost. And in fact, there's some pretty dire predictions on how many jobs are going to be lost. Bank of America is out there. Recent prediction here, economy to start losing 175,000 jobs a month. Bank of America's warning. I think they're undershooting it. I think it's going to be a lot more than just 175,000 a month. But when it comes to job losses, a lot of people just look at the unemployment number. They're not looking at the big picture. The big picture tells us that the economy, including the jobs, have not recovered in the past 2 years. Let's take a look at a chart here. All right, so here's the labor force participation rate, folks. They don't want you looking at this. The people out there trying to convince you that this economy is great, yeah, they don't want you looking at this. So here we were pre-pandemic, right? We see, of course, the drop, the plunge in the short recession in 2020 with the rollout of the health crisis. And look, we have not recovered. We still have not recovered to where we were pre-health crisis. And sure, the official unemployment number is low, but that's because they don't count all these people out of the labor force. After a while, people that are actually looking for work, they tend to give up looking for work. Or even if they are looking for work, they're not counted as being unemployed after a certain length of time. Why? Because this is a phony, manipulated figure. The numbers are fake and phony. Just like a lot of the numbers that we see, the inflation numbers are off big time. If you go to shadow stats, you're looking at closer to 20% price increases when you look at a larger basket of goods of what most people have to pay just to live a normal modern life. And what I mean by that is somebody living not off grid, right? Somebody that has normal, typical bills, utility bills, stuff like that, up closer to 20% as far as all these costs just to live a normal modern life. All right, let's talk about the stock market. Supposedly the big push higher in the stock market is because the one big story was Netflix. Netflix third quarter earnings beat estimates as 2.4 million subscribers were added. All right, so I guess that means the economy's strong if a bunch of people go out and buy a streaming service. So this is upside down and inside out. The more debt people take on and the more purchases they make, the more they swipe their credit card, people think that is a good economy. And sure, it's going to look good until the debt blows up in people's faces. Right now, it's just beginning. We're just now starting to see the uptick in the late mortgages, the late car loan, more people not paying off their credit card in full each month. It's just the beginning right now, right? So in a 9-inning ball game, we might only be in the first or second inning. But more people are starting to realize it. Even mainstream news talking about it here. CBS, Americans face mounting burden of credit card debt. So no, more people are not paying off their credit card. That means that the Main Street economy is not doing so good. When people say the economy is doing good, they may be talking about Wall Street profits, but they're certainly not talking about most people on Main Street. Another news item, ABC, recession forecast hit 100%. 100%. How often do you see a forecast that says this is going to happen 100%? All right, so even those news outlets that try to paint the rosy picture, they see the world through rosy glasses or rose-colored glasses. Now, the number that we talk about on how many people are living paycheck to paycheck, how many people are struggling financially is around 70%. Could be even higher. Look at this. Delaying big purchases, reducing debt. 76% of adults are making lifestyle changes to prepare for a potential recession. All right, so could that be just a shift? Maybe these people, instead of going to the amusement park, maybe they're buying Netflix instead, right? So just because people are buying Netflix doesn't mean that the economy is doing good. It means that people may be cutting back in other areas. Maybe instead of taking a vacation, they said, okay, let's pay whatever it is for Netflix now. All right, but make no mistake about it. Big, big trouble is here, and it's going to be more noticeable as the months progress. We're more than halfway through October now, and it's going to be interesting every day as we watch more of this news come out, more of this data, more of this information as the ugly truth is being revealed. The monster is lifting its head out from beneath the surface. And as always, keep stacking, folks. Keep preparing. Let me know what you think about this report down in the comments. Please like, subscribe if you like what we talk about here. Thank you for supporting this channel. Bye for now, everybody. Big love and peace.